Okay, let's go over crude oil. There's two buy signals on J signal this morning. Let me go over this. The market is in an uptrend. You can see the moving average has been up since 5:30 this morning. No shorts at all, right? No shorts, only buy signals. So what we want to do is we want to look at our large time frame, the 5 Simrenko. Now, did everybody get that email that I sent out, that Gerald sent out to everybody? 5 versus the 3 Simrenko, how to trade it? Did everybody get the email? The 5 Simrenko is used for deeper retracements, like here and here, deep retracements. The 3 Sim should only be traded on a first breakout above HVA or LVA in a retest. You do not want to take all trades off the 3 Simrenko. The 5 will produce a lot of good trades. It's just they're deeper retracements, right? So that's how you trade both of them. So make sure you review that email that I sent out to all you guys and gals. Now, you can see the moving averages were up. We're in an uptrend. J signal says, okay, wait for a trend change. Wait for a trend change. And let's buy the first blue dot retracements with the arrow. Okay? Now, what we want to do, Harry, answer that question. Let me get through this first. Let me make sure you understand how to do the 5 Sim. There's your trend change. We got above high value area, which is very bullish. This is a bullish stance right here. You want to see that on your 3 Sim when it breaks out also. That's a bullish stance right there, right when you get above HVA with trend. You look for the first Fibonacci's to pull back. There's 1 Fibonacci dot, 2 Fibonacci dot, 3. Then you wait for the arrow. The arrow fires off this morning. The arrow gave us a fire off right there this morning. That tells us we have a long setup signal. So you wait for the blue dots, the green arrow, and now if you want to wait for supply, if there's more demand than supply, the exact bar will be 2 bars after your arrow to let you know if there's more demand than supply. In other words, I want an order imbalance to come into the market. If an order imbalance comes in the market, instead of buying here at this arrow, I can literally let the market pull myself in on these trades. I can let the market pull myself in. What does that mean? It means I know after the blue fib dots I'm looking to buy. I know after the arrow I got a possible Elliott wave 3 pattern long. If you want really great confirmation, you can even wait until the second bar after the arrow to see if it closes above the high of that arrow's bar. If that second bar closes above the high of that arrow's bar, the market is telling you it has more demand than supply. It has an order imbalance at this bar right here. Let me make this big so we can see it, and then I'll go over it a little bit. So it's telling you there's your high of the bar. Let me get this off. There's your high right here of the arrow. So if you want really great confirmation, there's more demand than supply. Instead of buying the arrow, you can wait and buy right on the order flow confirmation bar. It has to be the second bar right there, or I'm going to show you the second one. It's at least got to be above the high of that arrow for the order flow to get you in the bar. So that's your exact order entry bar right here. Okay? Because you got the blue Fibonacci dots that came down. There's an automated or Elliott wave projecting a possible 3 wave up. There's the arrow. So if you do an arrow entry, then if it doesn't close 2 bars above that high, you know you possibly don't have a strong trade to the upside. If you just want to wait for that order confirmation bar and not enter the arrow and wait for the more supply than demand, it's got to close, a partial candle close above this high. If it does that, then it lets you know that's your exact bar entry. If you're going to enter with this order confirmation bar right here, then your stop is no longer this black line. The black line is if you use the arrows. If you use an order bar confirmation bar, your stop is the low of this arrow. It cannot close a partial body candle close below, which it did not. It's going to be really, really a smaller stop right here, or 1 bar before. I would not use a black line as your stop if you're going to use the supply demand bar to get you in. The unique thing about the supply demand bar, our accuracy is unbelievable with this now. Because what we're doing is we're qualifying it with the fib dots. We're qualifying it with market profile. Market profile broke out here. So it told me it's very bullish. We got the fib dot retracement, told us that's our area. We got the arrow that told us that's our possible Elliott wave 3. Our Elliott wave possible 3. And if that's the Elliott wave possible 3, then you can wait for an order bar confirmation, which is a close above your stop, right? We know that all's not going to work out on the 5, even the 5 Simrico. We will have some losers, which is part of the business plan. So we want to make sure our stops are nice and small for us, not large stops. I'd put the low of the arrow. Right there's your low of the arrow. If you want smaller stops, then it cannot close. Wicks can go below, but it can't close a partial candle close below. You can see there's your exact bar entry this morning. I'll go to the next one in a second. There's your exact bar entry this morning. It came down. It did not close below the low of the arrow. It wicked only. Wicks don't count. Market shot straight up for a nice big run this morning on our nice trade to the upside. So that's called the order flow confirmation bar. You can enter right there at that exact bar. Order flow confirmations. It's telling you that you have possible more demand than supply, and they should mark the market up. That's just reading the market, telling you market what to do. If you do that order confirmation bar, you got to make sure your stop is below the low of the arrow or the bar before. I would not go lower than the bar before on your stop. Here it stopped right to the exact tick. It does that a lot. I've seen hundreds and hundreds of trades by looking at this thing where it will stop to that second bar past almost to the exact tick before the arrow. It happens all the time. So if it closes below here or here, you got to stop yourself out of trade at a small loss. Okay, now if we go over to the next one, I get this question all the time. I want to answer this in a video to make sure we understand. We all know if we break out of HVA, it's very bullish, especially with 5-minute trend or market profile on our own charts. We look for a simple ABC pattern long. This exact pattern you look for in the 3 Simrico also, this exact pattern. That's the only way I like using the 3 Simrico, this exact pattern. So what you do, if you look, there's my arrow, fib dots, there's my arrow, but look at the second bar. The second bar doesn't close above it. You see how the second bar doesn't close above it? So that's not an entry right here. Where's going to be my order flow confirmation bar then? Well, my order flow confirmation bar is going to be a close that's still above the high of this arrow. This should answer all the emails I get when a situation like this happens. If it closes above the high of that arrow on a buy signal, see how the wicks don't count? Wicks don't count. Touch the high. Wicks don't count. Close above the high. There's your more supply, more demand than supply, this exact bar. As 1, 2, 3, 4, 5 bars later. That tells you they're trying to mark the market up on this exact bar. If you get in with this exact bar, your stop is still the low of the arrow or the bar before. It doesn't change. Doing this technique has produced 2 winners in a row now again this morning. Our accuracy has been seriously uncanny with this thing when using this type of technique. Because what we're doing is and oil is really neat doing this. We're using the supply demand of the market to work in our favor after we get a buy set up. Okay, a really neat way how to do it and a really great confirmation tool to use. Okay, are we on the same page, guys? Are you fine? Are we on the same page? Hand me a Y if you're on the same page with me. On the same page? Now, let's say this. Let's say that you don't want to do the order confirmation bar, right? And you just want to get in with the arrow. If you just want to get in with the arrow, right? When the arrow fires off on the 5 Simrico, what I would do is this. If you get in with the arrow and the second bar does not close above the high of that arrow, I would take a small profit and small loss. if you want to be ultra conservative with smaller accounts. In other words, if you do want to get in with the arrow, right? That's your original stop, the black line, and then you want to get out. If you're using an arrow entry then and not waiting for the order flow confirmation bar, then let the order flow confirmation bar tell you to stay in the trade or to exit the trade. It's a really great way to do it too, is that if you want to do that, you want to get a better fill in the market, then obviously the arrow is going to give you a better fill. That second bar will let you know if you got confirmation. Because that second bar is where we should see more demand versus supply, or what I call an order imbalance. Okay? So either way you want to do it, it doesn't matter to me how you do it. They're both very effective ways how to get in the market. What I'm finding is the order confirmation bar, what it does, it's limiting your risk because it's not getting you in a lot of trades. And if you take all qualified setups, you know, we've had a really good profit and loss statement just using this since I introduced it because it's that effective. So, you know, when you use it, just make sure it's the high of that arrow.